at the right time.
Good afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, and hello to all of you. I'm Alex Matthew, and this is the show where you can get all your equity-related queries answered. You can send them to us on Twitter, Facebook, YouTube, or WhatsApp, or you can call us on 022-4540-4141. You can also mail us at askbq@bloombergquint.com. Don't forget to add the AskBQ hashtag. Now, the two people who are going to help you answer your questions are Aditya Garwala of Yes Securities and Gauran Shah of Geojit Financial Services. Thank you so much for joining us on the show, gentlemen.
Thanks, pleasure.
All right, but before we get to the individual queries here on the show, let's take a look what the markets are doing. Well, it's not turning out to be a great Friday. In fact, in the last two sessions, we've seen some weakness coming by. In fact, as we speak, Nifty is approaching the 10,600 mark. Let's see where the closing comes about. But currently, it's a cut of almost 50 points. Let's just pull up Bank Nifty as well, which so far has been outperforming Nifty at least in the last 3 to 4 trading sessions. Bank Nifty is almost in the green. So once again, we're seeing some bit of outperformance coming from Bank Nifty, which trades with gains of almost 17 points. I want to pull up the contributors list of the Nifty constituents and check which are the stocks which are dragging the index lower. So it's dominated by all the heavyweights, Infi, ITC, Reliance Industries, as well as HDFC. What's supporting it is HDFC Bank right on top, which has nearly 10% weightage on Nifty. ICICI Bank is trading in the green, and HUL, which was down 2% in yesterday's session, has seen some bit of respite today. Adani Ports is the other one, which is seeing marginal gains in today's trading session. Well, in terms of broader markets, remember the market breadth in the last 2 to 3 sessions has not been so great. We've seen sharper cuts coming in for the Nifty mid cap and the small cap index. And as we speak, once again, NSE stats, if you have a look at that, it's in favor of the declines. And also just pull up the indices, Nifty mid cap and the small cap index, you'll get to see it's almost a cut of nearly of 0.3 to 0.4% for both these indices. To highlight few stocks, Nifty Pharma is your top sectoral loser for the day, and the reason for that is stocks like Sun Pharma and Aurobindo Pharma. They are the top losers there. Remember, Sun Pharma surged almost 3.5 to 4% in last hour of trade yesterday. So we're seeing some bit of cool off of those gains in today's trading session. Ahead of earnings, a lot of stocks which are in focus today. Ambuja Cement is up 1.4%. Let's see if they can post the same sort of volume growth that we saw from ACC and Ultratech. PVR is down almost 1%, but that ended at day's high in yesterday's session. NIT Tech, the stock has seen some bit of correction in the last 3 to 4 trading session. Remember, this is one of the outperformer on YTD basis. Let's see if the numbers disappoint. It's also slipped below the 1,000 mark as we speak. Some earnings reaction. Hexaware is down and down quite sharply, 11%. They posted a profit figure of almost 134 crore. JSW Energy is the one which has reacted negatively, and L&T Finance Holdings, that's also one of the top gainers in terms of F&O securities. Good numbers coming from L&T as the asset quality improves sequentially. Gaining in trades, a couple of stocks, some respite finally for PC Jewelers. That counter is up 22%. Remember, it's also in the F&O ban period. Merck is the other one which is up almost 8%, and some good gains seen from something like Andhra Sugar today. That's trading with gains of 11%, Alex.
All right, we've got a lot of viewers who are already asking their questions. Hold on tight. Some of you, I can just name them. Ashok Kumar, just hold on for a bit. We'll take a few queries and come straight to you. Harsh Kumar writes into us on YouTube. He has 30 shares of Cummins that he bought at 740 rupees with a 6 to 12 month view. He wants to know what to do with the stock. Now, if we pull up the stock and see what it's trading at right now, it's currently at 755.85, so it's above Harsh's buy price. Also, additionally, if you pull up the year-to-date chart, you'll see the fact that it has actually touched a low, a one-year low of below 700. It touched all the way down to 670, if I'm not mistaken, Aditya. It's run up since then. It's not touched that low again.
Right.
What's the view with regard to 6 to 12 months?
Okay, so if I take a look at the longer term charts, monthly chart and a weekly chart, stock has actually taken support at the lower end of the wedge pattern. So stock has been moving in a oscillating, rather in a bullish wedge pattern, and it has taken support at the lower end of the wedge pattern, which is placed at around 680 levels. So that's a good support level for the stock, and the gentleman has bought it at 740, which is not a bad price considering the fact that support is at 680. And plus, if I take a look at the RSI, it has also turned upwards from oversold levels of 37 on the monthly chart. So all in all, stock looks good to me. I would recommend hold on to the stock, and if it crosses 775, I'm looking at a target of 880 also. Okay. So it's a hold, definitely a good stock to hold on at current levels.
Okay, you can look to hold on into Cummins India at current levels. That's what Aditya is suggesting. I'm going to go on and take our next query from YouTube. Advait Supnika writes to us. He wants to invest in liquor companies with 1 to 2 year time horizon. He wants to know which one to go for. Gaurang, I'm going to come to you for that. Which is a liquor stock that you like?
Well, I do believe, good afternoon to all of you all, Amit, first of all. I do believe that India is a great consumption market, especially for alcohol and ice spirits, despite the various bans, whether it is ban on sale of alcohol on highways or whether it is a state level ban. But I'm also equally sure and confident that FMCG related consumption theme will do much better compared to alcohol or high spirits. So with that view, I would say that consumption, yes, it's a good sector to bet on, but high spirits, alcohol is the right sector. I beg to differ. In FMCG, I would advise, if this is a fresh investment that the investor wants to make, then either of the three, that is Godrej Consumer Products, Dabur or Imami. You can pick any one of these three names, and if you have to ask me which one should I pick if I had to invest, I would possibly choose Godrej Consumer Products.
All right. That's a view on the FMCG space. Let's move on. Mitosh Mora calls us from Mumbai with a query. Thanks so much for calling us, Mitosh. What do you want to know?
Actually, I've been holding the shares of GIC from its IPO day.
Okay.
And I wanted to know whether I wanted to exit it basically.
Okay. But
so I'm actually under heavy losses right now. So what should I shoot? Should I book it or wait for the level?
All right. So, Mitosh, I just want to understand, GIC, you've bought at IPO level, which is actually, which would be significantly higher than the current price. But did you buy into it with a long-term horizon? As in, did you buy with the intention of, and what was that horizon?
Yeah, I bought it with the intention for a long-term view.
Okay. But how long did you want to hold it?
I no longer want to hold it for long term basically.
Okay. So, all right. I want to actually get in a view with regard to the charts. Is it going anywhere? Can he make some or make up some of the losses that he's made?
If I take a look at the chart, Alex, charts are not looking too strong. Stock has been making lower highs and lower lows, and currently stock has broken its previous support of 700, and it's making a lower low of that. So not too bullish.
Okay, Gaurang, so the charts indicate that the short term is not very bullish, but a lot of people have talked about the insurance sector and how the long term is, or they are sanguine on the long term. He's already made significant losses. What would you recommend that he do right now?
First of all, Alex, don't have confusion in terms of long term, because the stock is not going the way you wanted it to go. You want to get out of it. I think these kind of confusion situations will only make you an investor who would possibly not be playing in for the long haul. We remain extremely positive. Yes, you are right. We also are positive on the non-life insurance segment, and New India and GIC Re are something that we recommended as a subscribe from a long-term point of view. And long-term, by definition, according to me, for a non-life insurance company should be at least 2.5 years, because it takes that much of gestation period with the kind of positivity that we foresee in terms of business growth. So if you really have made out your mind and if you want to exit, it's your call. But next time, don't sit on the fence. Either be on either side, either long-term or short-term or medium-term, whatever.
Got it.
So with that view, and in case if you can change your mind, stay invested. If you can't, excuse me, then maybe shift into M&M in the auto space. But these are not short to medium term. These are long-term investment ideas. and whatever losses you are making in your investment in GIC, I think with a year and a half time horizon, you should recoup that losses even come out in profits. But if you have a 2-year time horizon, and if you can change your time horizon to 2-year plus, the GIC-RE is not a bad investment.
Okay, that's the view coming in on GIC-RE, but our next query is on Philips Carbon. And in fact, we've been getting queries related to Philips Carbon in the last few sessions. We've not been able to address. So Ayush Agarwal on YouTube is saying he's holding 300 shares of the company at a price of 240. He has a long-term view. He's also suggesting, I guess, the earnings of this company are lined up for today. And besides Aditya, Ayush, pardon me, we've also got Ronak, who's written to us on YouTube. He also wants some sort of view on Philips Carbon with a longer term perspective. Gaurang, I'm going to come to you. The earnings are lined up today, and if I look at the 9-month earnings, they've been pretty good for this company. The stock's done well in the last 1 year. Promoter holding is somewhere about 53%, market cap of almost 4,300 crore. Do you think this can be a long-term play, considering the stock has already performed well in the last 1 year?
So you're absolutely bang on the issues and concerns that I have, Navneet. That last 9 months, 12 months, 18 months have been a stellar performance from the company, and equally so the market has rewarded the stock with the kind of upside that we've seen. I think today will be the asset test, whether the long-term investment theory continues to hold good or whether there is going to be any kind of misses in terms of earnings. And I'm afraid a little bit there could be some amount of negativity, because all these carbon stories have played out. Not only Philips Carbon, but even other companies have performed equally well. So if you are purely worried about how the earnings will come out, and if they disappoint, then the stock would possibly go into a tailspin. That's also a fact. Then take the money off the table, reassess the earnings once they unfold today, and then make a fresh call and a fresh investment and a fresh beginning after that. But if you're not willing to see the downside, and if you're afraid, then like I said, take your money off the table.
All right, that's the view on Philips Carbon. Let's take another question. This one is an interesting one. Harsh Vardhan writes on Facebook. Harsh has pointed out two companies, Mayur Uniquoters, which is a manufacturer and exporter of types of PU leathers, PVC leather and synthetic leather. And he's also asking about Indigo shares. Now, these two companies, particularly Indigo, have corrected in the recent past. Mayur Uniquoters is down about 8.5% on a year-to-date basis. Indigo, over the last few weeks, especially after the resignation of Aditya Ghosh, has corrected significantly. Are these good levels to enter these two counters, and what are the charts indicating with regard to the long term?
Okay, I'll first come to Indigo. Stock, the last time I was in the show, somebody had asked about Indigo, and I clearly mentioned stay away from Indigo's charts are not looking too good. Currently also, if I take a look at the charts, they're not looking too bullish to me at the moment. Stocks saw a sharp sell-off on good volumes yesterday with a gap down. So I would stay away from Indigo even at current levels. Probably stock can correct to levels of 1,050 or even lower. Right now it's trading close to about 1190. So I would stay away from Indigo. As far as Mayur Uniquoters is concerned, yes, stock definitely looks good. Stock has been going through a consolidation phase for some time now, and a breakout above 510 to about 515 will be bullish for the stock, and one can definitely look to buy Mayur Uniquoters even at current levels.
In fact, yesterday we got a query on Indigo whether it would breach that 1,000 mark, right?
Yes, we're still waiting for that, I guess. Well, that's the view coming in on Indigo. All these aviation companies have corrected this week. Let's move on and take some more queries. I think we've got a caller lined up named Pawan, who's calling us all the way from Nagpur. Hi, Pawan. Good afternoon. Thanks a lot for calling us today. Tell us, what do you want to know from our experts?
Good afternoon, ma'am. Actually, I have currently one lot of Nalco at 84 May series. So, should I wait it or should I average or exit? What should be the next step?
Okay, Pawan, I'll have to check if Aditya tracks the F&O space.
Okay, so National Aluminium, definitely I can take a look at the charts of National Aluminium.
Sure, I think, can I just pull up the current price of Nalco? It's 78, so he's bought out of the money call option of 84. Do you see any room for this stock to touch the level of 84?
Not in current expiry, it looks tough.
Not in current, so you think he should just exit at current levels?
Yes, because the charts are looking weak. Stock is down about 2% in trade today. And if it breaches levels of 77.5, probably it will slide down to 74 and lower.
Pawan, do not wait. Aditya suggests you can look to just exit your current position, the one lot that you're holding of 84 strike. Alex.
Well, we've got viewers from the F&O show moving on to the Ask VQ show, but then they're all welcome. Gaurang, I've got a question specifically for you. This one from Devkanta Paul, who's writing in on YouTube. I'm going to read it out. I want to ask from Gaurang sir about Sterlite Tech and Jubilant Life for a 3-year view. Very specific and addressed to you, Gaurang.
Thank you for asking that question, and we remain extremely positive on both Jubilant as well as Sterlite Tech. And my sense is that after the initial meltdown that we've seen in IT, especially after the numbers that we saw, and not to forget, Alex, in the last 1.5 to 2 years, IT stocks have rallied 200, 300, I beg your pardon, 50, 60, 70 to 100%. And we remain positive then, we remain positive now. The only concern is that there could be some cool off with respect to the IT sector, and you would also see Sterlite Tech cool off a little bit. But not taking any negatives from that, it's a great time. If it's a fresh investment, make a beginning, and on dips, you can definitely add not only to Sterlite, but even Jubilant as well. And my sense is that in the next 2 to 3 years, the time horizon that he's got, we should definitely get a decent return on earnings visibility and improvement.
Okay, that's the view coming in on Sterlite Tech as well as Jubilant Life Sciences. On YouTube, Adit Shah writes to us, he's holding 250 shares of L&T Finance and his average price is 166 rupees. Remember, we just read out the earnings for you. Good set of numbers, hence the stock has reacted. They've been able to reduce the sort of asset quality that we've seen. That's improved on sequential basis. But actually, he wants to hold on for 2 years and he's asking, can I accumulate more at current levels? Aditya, first I'm going to take your view on the charts. Do you think this is the right level for him to average?
Yes, I think so.
Okay.
Stock has broken out from a resistance zone today on beautiful volumes. Volumes are healthy. So these are bullish signs, and I would definitely recommend him to average at current levels. I'm looking at a target of 190 and higher. Probably if he wants to hold on to a longer term time horizon, probably it can touch even levels of 210. Probably 1.5 years, stock can touch 210 as well. So these are very good levels to buy. And on the weekly chart, stock has broken out from a falling channel. So the double confirmation on the daily charts broken out on volumes, and on the weekly charts broken out from falling channel. So very healthy signs for the stock and bullish here.
Okay, so technical view, Adit, is you can look to average if you're looking to buy more at current levels. But Gaurang, if you got a chance to look at the earnings, asset quality definitely has improved, and he wants to hold on for 2 years. Would you advise him to do that and add more at current levels?
So now only as a disclosure, we've been watching the earnings from 65-70 levels of L&T Finance and Holding. And from that level, the stock has created the kind of return that you can possibly see as of now. And I can even go on record to say that this is a dark horse that I would bet on for the next 2 to 4 years. And I wouldn't be surprised if your returns would multiply at a similar rate or even better on earnings visibility. So stay invested. And yesterday numbers, well, it was much better than what our estimates were. As of now, to put it on record again, we are working with a target of 225. These are medium to long-term targets. But I'm quite sure and confident that we will revise the target upwards, given the kind of conviction and confidence we have on this.
Any other dark horse that you want to share with our viewers?
Well, there are plenty of them now. So I would say Federal Bank. Yeah, so Federal Bank is the other one. Stock corrected. Earnings come out next week for Federal Bank. Close to about 100 rupees. Your downside is extremely protected. 145 is the target. Again, a conservative target, revising it upwards. KEC International would be the third stock that I would possibly play out as a theme over the next maybe a year and a half, 2 kind of time horizon. And one more, if I have to mention from the auto ancillary space, then that would be Motherson Sumi.
All right, those are the dark horses according to Gaurang Shah that you have to watch out for. Big call there on L&T Financial Services. L&T Financial Services.
Yeah, Financial Holdings.
Financial Holding. All right. Let's take the next question. Rangarajan Balakrishnan is asking on Facebook, is it a good time to enter Dhanuka Agritech at the current market price, which is around the 590 mark currently? The time frame that he's looking at is 3 to 6 months, and he's asking specifically what are the target price and stop loss that he should keep?
Okay, so stock has been making lower highs and lower lows, not too bullish here. I would not recommend him going and buying the stock at current levels. I'm looking at an extended correction in the stock. Probably stock can slide down to levels of 500. So not a buy at current levels. Probably wait for further corrections and stock to consolidate. Then probably it's a good idea to buy.
It's fallen about nearly 20% so far this year.
Yeah.
Okay, that's the view coming in on Dhanuka. On Facebook, Anshul Tyagi writes to us, he's holding 500 shares of FCL, I guess that's Future Consumer, at a price of 70. He wants to know what's the view for the next 6 to 9 months. Aditya, I don't know why I'm having this deja vu. I've asked you a question on Future Consumer in the past as well.
Yes.
I think there were some fundamental reports which have come in the last 2 months, but if somebody is holding at 70, the stocks crashed to levels of 50, 56, what would you advise them to do?
Continue to hold average. This is what I had said last week as well.
So I was right.
Yes, I'm looking at a target of 75 and higher here. So definitely hold an average at current levels. Extremely bullish.
All right. Gaurang, you've said that you're very bullish on Federal Bank. What's the view on Andhra Bank? We have a viewer, Pavan Kumar, who's bought 4,900 shares at 38.45, which is approximately the current market price.
So I would be extremely critical about certain banks, whether it is certain select private banks or public sector banks, especially public sector banks. And they would continue to underperform given the kind of issues that these banks have to do, including Andhra Bank. So, if it's at market, you're not winning or losing anything, move into Federal Bank, move into DCB, which are preferred picks according to me. And like I mentioned, I just mentioned Federal Bank is one of the dark horses that I would possibly, advise to stay invested for the next 2-3 years. And the kind of return would be at least 40 to 50% from the current CMP, since our target stands at about 145. So, and I would advise all your viewers of this particular show, don't rush into small and mid-cap private public sector banks, I beg your pardon, because public sector banks, there's going to be a lot more pain that will be seen in the fourth quarter, and those slippages would also be visible in this financial year's earning in form of at least first, second, third quarter.
I call there because a lot of viewers actually are talking about the banking stocks, the fact that they've corrected so far in the current financial year and in this year, and it looks attractive, but it might just be a little dangerous to get in at this point.
Okay, I just want to address PVR's earnings. Reason being, the stock was up 3% yesterday towards the close. The numbers have just come in. The profits are at 26 crore versus a loss that was seen in the corresponding quarter, and the margins too have improved. Remember, seasonally, the March quarter is not so good for the company, but Padmavat release was delayed, and hence probably that's auguring well. 585 versus estimate of 557 in terms of revenue. The stock's trading with gains of almost 1%. All right, let's move on and take some more queries. Ramesh calls us from Bangalore. Hi, Ramesh. Good afternoon. Tell us what you want to know from our experts.
Actually, I have a stock of Arcotech 1,000 shares at 48 rupees. So I just want to know what is the view on for next 6 months or 1 year.
Okay, you want to hold it for the next 6 months, right, Ramesh?
If it is worth holding, then I'll hold it.
And when did you exactly buy these shares?
3 months back, actually.
3 months back. Any specific reason why you bought these shares?
It is one of a recommendation from one analyst.
Okay, recommendation from an analyst. Fair enough. Just want to educate our viewers. It's a company which manufactures copper and copper alloys semis, including strips, sheets, foils, bars, as well as rods. If I look at the company performance on a YTD basis for this year, it's down 57%, market cap of 250 crores. Aditya, if I can come to you on the charts, I don't know if you're tracking this counter. What would you advise him to do? He's bought 1,000 shares at 48. Current price is 24.
25. As you rightly pointed out, stock is down 57%, and prior to that year, stock was also down, I guess, some 57 to 60%. So back-to-back 2 years, stock has suffered huge losses. Definitely not a stock to hold on to.
It's at a one-year low right now.
Yes, exactly. It's trading at a one-year low, and if the gentleman has a heart to book a loss, I would definitely recommend him to book out losses, because stock can fall to any levels. It's a free fall right now in that zone.
Okay, Ramesh, hold on. That's a technical view coming in, but I definitely want to take this this query to Gaurang because, you know, you taking recommendations from analysts on something like Arcotech. I don't know how widely this counter is tracked. Gaurang, any advice for retail investors who put their money in a counter which has corrected a lot in the last 1 to 2 years?
First of all, give a wake-up call to that gentleman who told you to buy the stock. Secondly, just don't go and buy the stock because Gaurang Shah is advising or some other person is advising. Understand the company, do some homework, do some research at your end because this is your hard-earned money, and you should get a wake-up call much earlier rather than waiting for your capital to erode 50%. So I don't see any merits. You should stay invested in such stocks. Get into the recommendations I've listed on at least I think half a dozen of them in today's show, and stay invested for long-term. Possibility of recovering your losses is definitely visible. I don't know about exit and profit, but next time be extremely careful and just don't blindly go and buy the stock. Do some research.
All right, fair call. Very important to do your own research, clearly. Let's take another query. I'm sure we have time for more. Akash Agarwal is writing in on YouTube, and he's asking for a call between a couple of banks, Yes Bank and IndusInd Bank, for a long-term view. A lot of people have talked about these two banks and the fact that they are relative outperformers in the private banking space. Gaurang, what's the view here? Which would you choose? You've already said that you're bullish on, on Federal, but between these two?
Well, Alex, you are asking me to decide whether I want to jump into the deep blue sea or whether on the other side there is an ocean of fire. We have positive coverage on both.
Okay.
And I would say put 50% in Yes Bank, put 50% in IndusInd, and do an SIP every month in both.
All right, that's a fair call.
Okay, I think we're running out of time. Thanks a lot for writing in your queries to us. We'll try and address most of them next week as well, so keep writing. Well, on that note, I would like to thank both our guests. Thank you very much, Aditya as well as Gaurang. It's a pleasure having you both on this show.
Thank you so much.
Well, that's all that we have on this edition of Ask BQ.
It was a fun one, but do remember that we're just a tweet, post or call away, so do keep your questions coming in, and we promise to address as many of them as possible on our shows. You can log on to the website bloombergquint.com and search for the hashtag AskBQ and get the answers to all the queries that were discussed on this show. Up next is Power Lunch. Do keep watching. This is Bloomberg Quint.